Hello everyone, and hope you had a wonderful week. It's been a while since we posted on YouTube. I think we're planning a lot of things, but we've also been busy, Ken and I, so more content yet to come. But I thought it important to do a really quick one and just do a breakdown of the markets and what has been happening over the weekend. A lot of liquidations, a lot of market drops that happened, and people are still trying to get a hang of things. And I don't believe in this day and age and time you should be struggling to really get information out of the market with AI, so many AI, what is it called? Infrastructures and websites and all that. You have ChatGPT, you have Grok, you have Copilot. You have so much. I don't think it's impossible for you to get access to data. But anyway, I'll show you an example of how I break it down, how I do my research. And remember, look, at the end of the day, it's up to you to put in the work to find out what is happening, to be ahead of the markets, and really to understand what is going on in the markets, both fundamentally and technically, and also sentimentally. Of late, like Ken shared with you guys previously, I've been sharing with you, we've more or less moved away from normal forex pairs to more or less stock market indices and crypto, especially me. The last few weeks, you saw me with a crypto trade that was running. I think that's the last video I shared. I had an Ethereum trade running. I shared but over the weekend, I had my break evens. I'll show you, I'll break down the markets. I got a break even, stopped out last week on Friday when markets had a crazy drop, which we'll look at. We'll see how in the financial markets, the stock side, two point something trillion was wiped out. On the crypto side, about 400 billion was wiped out. If you look at the percentage terms in terms of market capitalization on both of them, the stock market wasn't that bad, but the crypto market was quite hit. If you look at it from a perspective of the total market cap, we'll look at that. I'll show you how, guys, you can look at that. And we can look at a few other things that affected the markets, what Trump said, how it affected markets, what Trump has said and has made markets, futures markets, crypto markets. And now as markets are opening today's Monday, you're seeing markets are really rebounding. We'll also look at that. And a few things that I'm also looking at here and there and what we're expecting. So this is a raw video, not edited, just full on market analysis, straight on everything that I'm just talking about, nothing edited out, nothing edited in. And at the end of it, it's important to say that this video is proudly brought to you by Paperstone, your best broker in the market. So make sure to open an account. Links are below. Open an account to them, and you can trade all these markets that we're talking about here. Over the weekend, I took another Ethereum trade on Sunday, which I've already broken even, because after I took that trade a few hours later, I had a 10%, markets were up 10%. Of course, with how I trade in the CFD side, I didn't make a 10% return because I'm not risking all my account. But we'll see how markets are able to rebound and how I was stopped out, came out, I've come back in. Markets already way above my entry point. I've broken even, and I'll take you through a step-by-step process of how I got into that trade and how it's running and how I'm planning to continue watching it, because I really believe what Trump said was just a flukes in the market. Trump can start world war. Trump can, I don't know if he can end it. He can start it. But ending it, he normally says he needs a Nobel Prize. I don't know if that's the case. We should give him some time. He just came back to presidency this year. So there's still much to see. But this is Trump's era. This is what happens. This is what happened for those new traders who weren't here in the previous season. This is what Trump did last time. This is what he's doing this time. Of course, this time there's more market capitalization, both in the crypto market and the stock market, commodities market than he last left it before Biden became president. So even now, markets are more volatile, more people are more involved in the market, and it's going to catapult like that for the next 4 years, let's say more or less the 3 years that are remaining, because next year, in the next 3 years, October, November, we'll be having the next election. So without further ado, let me just share my screen and get right into it. Okay. So where do I start? Let's start with what happened over the weekend, and I'll come and give you a few trading ideas that I have running, not only the ones that I have running, but also in the markets. generally, because I believe Solana has a very good buying point over here. We had a very good buy point to the 175 key level. Down there, markets are back to nearly 200 key level. And I expect these markets to really shoot up from here thereafter. But let's look at what has happened over the weekend first, okay? And one way, let me show you guys how to find data from the financial markets. It's not hard. With AI, it's simply about prompting. But I believe people have a major problem in knowing how to prompt, asking the right questions, and using the AI fully. Okay, especially if you're using the free version, because the free version, if you don't prompt it well, because Ken and I both have the free version and the paid version on ChatGPT, that is, if you don't use the prompt well, if you don't prompt it well, then it'll just give you basic stuff. Because on the paid version, it goes deeper and it can do the deep thinking and all that and give you a much elaborate answer. Just by telling it there, even if you have not prompted it that much. But still, even on the paid version, the better you prompt it, the better information it's going to give you at the end of the day. So let me show you like an example, and I wanted to show you using a free version of how sort of like I prompted it earlier on. Like, look, you just go online, and I'll tell you guys, maybe you can copy paste this. Just go and tell it. This is the free version, okay? Give me a breakdown of the current financial market over the weekend from October 11th. Now, I confuse the dates, just put October 10th because that's from Friday. You want to look at the whole weekend from 10th to 13th. Search the internet, so prompt it well, okay? If you just tell it, and make sure you put the date, because if you don't put the date, it won't update you on this current weekend. I mean the year, it might update you last year. So you have to be very detailed in your prompting. Search the internet and give me a well-elaborated breakdown of the financial market environment. What announcements were made before and during the Trump announcement that sent the whole market crashing? What did Trump really say that crashed the markets? Which markets were impacted the most? Which industry was impacted heavily and how? What fundamentals were in play leading towards the market crash? Because markets don't just crash because of certain information. There's something always building up. Okay, for me, I really believe markets are at a very crazy peak level, and I talked about it in a previous level where markets are above my buying points, and it's not levels that I'll be looking to buy, especially in the stock markets. And those are part of the catalysts that push markets. Another thing that also push markets to crash, for me, this is just my understanding, is, and I explained this in a different video. During the month of September and October, historically, we normally have a very bad crash. If you remember that video, most of you watched it. It's on my YouTube channel. The markets had a really, normally, historically, September marks the worst historical date of crashes, and early October. Okay, and the same October and November, we see the markets really having the highest gains in the markets compared to the rest of the year, because from those crashes normally comes a rebound, and that's what we're seeing in the market. So those are what we're expecting. If you understand where we're coming from, you can understand where we are and where we are going. So it's important to be looking at history in that method. So you can also prompt it here, maybe for you guys, put an additional to give you history of how markets normally react during the month of September and October, or the last quarter of the year, and how you can prepare yourself. As of, so I told it here also, as of October 13th, 2025, be specific with the dates, which markets have recovered the most and by what margin from the weekend lows, okay? So I won't go through what this explained to me, but you can just look at how detailed and elaborate it gave me, industries and all that. So prompt it. I want you guys to put in the work. Prompt it yourself. Go do your own research. You have access to ChatGPT. It's free and nothing else. I don't think we're living in a good era where you can get access to information easily. If we were living back in the 2010s, honestly, here in Africa, here in Kenya, unfortunately, it wouldn't be this easy to get detailed information about what is happening around the markets. You really have to make a lot of phone calls, pay a lot of subscription fees, pay people who can also send you information from different sources of the world, which is quite tedious. You don't know which information is true, which one is not. But now with blockchain, internet, AI, man, it's easy to get the truth of what actually happened in the market. So don't stay behind, guys. Don't stay behind. Now, I wanted us to look at this Twitter guy. His name is Master. He's an OG crypto watchdog. So sometimes I just get information from him. He just watches the markets and what is happening around the markets. Doesn't get as much reviews as I thought he would, but anyway, he gives an elaborate breakdown of what happened. So here's a timeline that he explained, the timeline of the biggest crypto crash in history, October 2025. And remember, you guys, look, I talked about this in a previous video. These months normally act as the worst months of the year historically and also the biggest recovery times. So these are times not once you've understand history, it's important to take those positions. And that's why I took that position in Ethereum over the weekend. I also wanted to take a position in Solana, but I didn't want to be too exposed in the crypto markets with my own personal CFD accounts. Okay. I wanted to live because look, cryptos are volatile. So for me, I started trading this really recently. And I'd rather have at least one crypto running at any one time. I don't want to have Bitcoin, Ethereum, Solana. Those are the main ones that I'm looking to be trading, running at the same time. I'm looking to be having only one because of the volatility involved. I'm still learning about it and getting a hunch of it. And then I leave room for other markets that I've been trading, which are the indices and the commodities, with three major indices in the US and the commodity, which is gold, which I don't think I'll be having any trade anytime soon. But there was something that was building up that I look at, but markets have gone to an all-time highs. I don't think I'll be trading that anytime soon. But those things I'm watching, and I want to show you guys that. Okay, but this guy gave a very good elaborate breakdown. So you can search for him on on Twitter and check what he had to say. I have gathered every available piece of information, every rumor, etc., and all that. So unfortunately, over the weekend, this might be rumors. I don't have any confirmations. There are some people who died over the weekend because of the liquidations. And I remember my girl was asking me, Caleb, what do you mean by liquidation? Why is this guy, markets didn't crash to zero. Okay. Why is this guy, how did he lose all his money? How did he be able to have his, like I saw someone lost $30 million over the weekend, and this is just one person. But there's some people who also made quite some money, and I'll show you how it was quite, especially the people involved around the Trump circle, World Liberty, made some big positions. And you'll see this guy put them very good in a timeline. And what was I saying? So yeah, with the leveraged, so when you trade leveraged products, and every market can be traded in a leveraged products, just know you're increasing your risk involved in the markets. The market itself will move whatever percentage is going to move, but your account, if you're using full margin on a leveraged account, it's going to get much more volatility, much more spikes, much more margin calls as compared to the real market itself. So that's why you normally see people posting online, and you see someone when the market has just gained, maybe you're trading GBP USD, market is up, and mind you, currencies don't move big percentage. Getting a cryptocurrency, a forex currency moving more than 1% in a day is rare. But when it happens, you normally see some people, GBP USD is up 1%, they've quadrupled their accounts. Their account was trading at $500, they now have $2,000. Someone had $1,000, they show the profit is running at $10,000. Now, that's the leverage products. When you're leveraged 1:100, 1:200, 1:400, and some brokers even go up to 1:1,000 and 1:infinity, where you can leverage your accounts indefinitely, not indefinitely, but to an infinite from number, okay, which is crazy. I've never traded full margin myself. Maybe when I was starting out trading, when I didn't understand anything and I was just taking any lot size. But when you're leveraged, if market is just down, and mind you, like I'm saying, GBP is up 1%, someone has quadrupled the account. GBP is down 1%, or even 0.5%, someone has blown the account because they're highly leveraged and they're taking on full margin positions on the leveraged account or the leveraged amount that they have. Okay, note those go together. I can be highly leveraged, but I don't take full margin on my leveraged account. Okay, like I'm always leveraged 1:100. I've never taken a fully marginalized trade compared to my leverage. And what I mean is basically, if you're leveraged 1:1, it basically means if market goes up 1%, the maximum you can make or lose is 1%. If you're leveraged 1:1. If you're leveraged 1:10 and you take on full margin, if market goes up 1%, you can make maximum 10% if you take on full margin, full position on that. Okay. And if your leverage 1 is to 100 and the market goes up 1%, you on the other hand can make a return of 100%. Or opposite, if market goes down 1% and you had bought into the market, then you lose 100% of your account in that one trade if you took on full margin on that leveraged account. And mind you, it goes higher. If your leverage 1 is to 1,000 and you take a full-on margin on the 1,000 leveraged account, if market just goes up 1%, my friend, you'll have made 1,000% return if you took on full margin. That's how crazy the market is. But also, if market goes down 0.1%, you'll have lost 100%, which is the maximum drawdown you can have to the downside. Remember, to the downside is always capped. To the upside is indefinite, in infinite. Okay, you can go to a high account, but at the end of the day, we are risk managers before we are traders, before we are speculators. You need to understand risk at the end of the day. So a lot of people were highly leveraged markets now. Now bring that to crypto. I've just talked about a 1% gain. When it comes to crypto, markets can move up 10% in a day. Like yesterday, my Ethereum trade was up 10%. The market was up 10%. And there are people who made double the money. They quadrupled the money on the leveraged account. Okay. Now, let's look at what this guy had to say. I won't go through everything, but I think he's given a well-detailed breakdown of everything which I'd like to talk about in a structured manner. So the prelude, the disaster to the disaster, what happened? And this is the same thing I just told you. You can search here, ask ChatGPT what was leading towards that, what information was there. Okay. By late September, the global markets were stretched thin, and that's what I'd broken down already. If you come here to the markets, especially with the indices and all, let's look at it from here. I want to talk about silver today, trading at all-time highs. We'll come to that. If you look at this, markets were at a highly level. Okay, if you look at the daily chart, okay, markets were trading near R3 for the year, for the month, for the year. You can see also how highly markets were trading. We've had a very good bull market since we bottomed in March after Trump's tariffs. If you remember that, markets have really been going up. And this is just US 30. If you look at US 100 and US 500, these markets are really stretched thin. To me, it's near, for the year, it's near levels where you do not want to be heavily buying into the markets. You want to be very skeptical. And if you look at US 500, more or less the same thing. US 500 and NASDAQ have been moving quite volatile. US 30, of course, is the least volatile indices among the three, so it's not been moving as much. But if you look at the US 500 and the US 100, especially the US 100, which the markets this year have really been affected by AI companies, tech companies, blockchain companies, which are basically technological companies, are what have been impacted the most here. So markets were stretched thin. According to same analysis I had, same thing this guy is saying. Markets were really stretched thin. US government faced third shutdown extension because they've not yet come up or really the fiscal uncertainty, the monetary policy and all that is still, especially the fiscal policies are still uncertain in the country. The Federal Reserve had just slashed rates to 4%, injecting short-term liquidity but fueling leverage speculation. Remember, when there's lower in interest rates, markets are much I mean, money is much more accessible and people are going to gamble it in the market and speculation. So that's what you're seeing happening. China imposed export restrictions on rare earth elements. Now, China supplies nearly 90% of the rare earth elements that are needed in the technological companies around the world. Nearly 90%. They have a very big control on that. So if they stop or if they restrict that or put more tax on those things, it's going to be much more expensive for you and I and the other individuals to be able to access this because the prices are going to go higher. Okay, so critical for semiconductors and mining hardware, like I just talked about, like Nvidia depend on this a lot. Nvidia is the biggest company by market capitalization in the world. So these are things you need to look at. And people who are using BTC, Ethereum. So everything is interconnected with the mining companies, with the companies like Nvidia that are creating these chips that are able to generate those powers that are needed for miners and software, cloud computing, blockchain running, all those things. Okay. Futures BTC hovered. So those are what happened. If you come to number two, the spark 10th, the tariff bomb, what Trump actually said, exactly 10 UTC Former former president posted. Okay, actually, I don't know why he said former US president. He was the former. He is now the current. Posted on Truth, Truth, Truth. I told you it's unfiltered content today. So Truth Social. 100% tariffs on all Chinese imports. Now we can look at that. Now, I don't think many people use Truth Social. I think the most followed person on Truth Social is like an egocentric social media platform for Trump since he was banned on X a long time ago with the previous regime before Elon Musk actually took over. That team before had blocked him, so he opened sort of his account where he can be posting serious stuff and sort of their Truth Social. And I think it's the most followed person. But he posted over the weekend here. It has just been learned that China on Thursday last week, just the day before, had said they want to increase those restrictions on their rare minerals and elements from their place. So posted, it has been learned that China has taken an extraordinary aggressive position on trade in sending an extremely hostile letter to the world stating that they were going to, effective November 1st, 2025, impose large-scale export controls on virtually every product they make, and some not even made by them. This affects all countries, which is true, without exception, and was obviously a plan devised by them years ago. It is absolutely unheard of in international trade, which basically, guys, all markets run on international trade. It's all about relationships, markets, globalization, which industries are you entering. It affects international trade and international supply chain. A moral disgrace, whatever. Based on this, okay, now China has taken unprecedented position and speaking only for the USA, not other nations who are similarly threatened, starting November 1st, 2025, the same date, or sooner, depending on any further actions or changes taken by China, the United States of America will impose 100% tariff. So back to the tariffs problem. If you remember what happened during the tariff era in earlier on in the year when Trump started, when he became president, and there was this tariff wars and all that, and that made markets fall by a big percentage, which all that was recovered already, and markets are trading even higher than the previous high before the tariff saga started. We're back above that. So China over and above tariff currently. So it's just basically about tariffs. And that's what you're seeing happening. Now, this was when we had the previous tariffs. Okay. Now you can see here we had a very long break, and I mean bearish trend to the downside for some time. This is a weekly chart. So for about since February 1, 2, 3, 4, 5, 6, 7, we have about 7, almost 2 months of bearish trend in the stock markets at large before we had that rebound and markets started going back up. You can see to all-time highs. This time we've only had one day crash. It was a one-day market to the downside. So we haven't seen a big crash yet on that. Now you can see all markets were affected except gold, which basically, guys, gold has been on a bullish run. And I talked about this if you've been watching my our financial hub Instagram account, which you can follow in the links below. And I talked about this multiple times on the stories. Stop trying to catch a gold top. A lot of you have lost money, and I'm sure even after I posted that, there's still a lot of you who went ahead and lost more money trying to catch a top on gold. Look, guys, I've traded these markets for years. You can see where my R3 is on the weekly chart. Basically, for me, like during the year, these are very highly extended levels. And you can see for the past couple of years, last year, 2024, markets reached R3, consolidated, pushed way above. Into the new year, we traded a bit, markets pushed. This year, same thing. We're trading here, markets have gone crazily above. When gold is in a true bull market, bear factors are very much ignored. This R3, whatever you're looking at, my friend, they cease to make sense. And you can see here, this was the last time I posted, and it was down here. Stop catching tops. And this was here. So there are people who tried catching a top here. Okay. There are people who say this is daily chart, first red daily candlestick, they tried to catch a top. They tried to catch a top here. They tried to catch a top here. They're still trying to catch a top here, my friend. Just stop playing that game. Gold is normally in its own world when it comes to a bull market and safe haven. With what is happening around the world, with the fiscal uncertainties and all that, there are many people who have taken a long gold position. They were targeting 4,000. I've heard rumors that many people who are these big banks are still targeting 5,000 for the year, before the year ends. Okay, and 5,000 is not a fast stretch. This year market alone has come from lows of, when did the year start? So that you can see it's not a stretch here, around here. So let's start January. Down here, 2025, market was trading at 2,500. Okay, so if gold is able to reach 5,000 before end of the year, it will be 100% return. And that's what you're seeing sort of happening in tandem with the crypto markets. Now, the digital gold, which is Bitcoin, was also trading at slightly traded a bit at all-time highs before the weekend saga happened, which at the end of the day, you can still see how gold and silver is king in terms of uncertainty and safe havens. Why is that so? Because it is not correlated or connected to these global supply chain manenos that are happening. For example, you've seen, I've just shown you right now, if China imposes those restrictions on their exports and rare minerals and elements and those things that the whole world needs, it's going to cost more for companies that do chips like Nvidia to get access to those, and a lot of individuals and companies rely on getting those good hardware stuff from Nvidia in order to mine, in order to do AI things, in order to do cloud computing, and all those things that are needed in today's world, which is going to cost more. And that's why you saw this market really falling. Gold and silver have no correlation with that. You get my point? And actually, a lot of semiconductors and electronic companies actually use already gold and silver for their electronic devices in their chips and all that. And already you're seeing these things are trading at all-time highs. Okay, so it's much more expensive to get this product. So already the price of this product already going up. So if these minerals others also go up, then it's going to be really expensive for these companies to actually make money and also for people to actually buy those products from them. Okay, so those are things you should have. You should read the market widely and get that intercorrelation understanding of what is happening around the markets. So if you look here, silver is trading at all-time highs. Okay, let me just look at it now because I won't come back to it. I go back to the tweets and what is happening over the weekend. Also acted sort of a safe haven over the weekend. A lot of also I'm still yet to do more research on this one, but a lot of buys also on this one in terms of companies that use it for the electronic devices and all that. So really going up, but also acting as a safe haven. And same structure is also observed here. The system that I trade is also observed here. I've been watching this market for some time, and you can see here from down here. Market had started a bull trend. This is an impulse correction in the form of a flag. If you come here, you get a flag here, okay, a flag there, which acted successfully. So two successful flags, and you get one more here. You're seeing that, another flag there, markets trading. This one wouldn't be a very good buy because you're seeing it's trading. Well, it still worked, but for me, it wouldn't be a good buy because you're seeing it's trading near R3. I don't think I would have taken this one if I was trading this pair. But this one, you can see it was trading around the P level, and this one was trading around the P level. And now you're seeing markets at crazy highs going further up. Okay, so good buys on those ones. US oil, same thing. On a bearish trend, we've been having multiple flag positions on the 4-hour chart. If you come here, you can see all these flag patterns to the bearish. Now oil has been in a bearish trend. It's not just what happening over the weekend. This one has been in a bearish trend around the world. We've come up from levels not too far, just in June alone, trading at 77, and now we're trading slightly below the $60 a barrel on crude US oil. Okay, bearish market. So back to my Twitter guy and what happened over the weekend. So those tariffs are what affected the markets. Okay, and that's what Trump actually said over the weekend. You can see within minutes, stock markets lead 3.6%. If you come see here, the crazy drops. You can see this was the drop on Nasdaq, which had the highest in among the three indices drop. Then you have S&P 500, then you have the US 30, which drop that low. I was looking for a buy here. Luckily, I didn't get it because markets actually, I wanted to talk about this. Markets didn't form a very good entry for me because I was looking at this trend line, and you can see it starts from around here. I'm not the biggest trend line trader, but at the same time, when markets came down here, it didn't offer me a good entry point. Like down here, it hadn't tapped the 61.8 well, it hadn't tapped my equidistance level well, because I was looking more of an extended level, markets to really touch the trend line well. Okay, and to come to the lower side and touch it well, including my equidistance level and the 61.8 level. Okay, so what happened? Actually, I thought this market had left me. Market had actually rallied just before this drop. Market had rallied. If you look at the 1 week, 1 hour chart, and I believe if if Trump did not tweet these manenos and what's happening, one or two things may have happened. We could have gotten a bit further, deeper correction for maybe people like me who are patient enough to get better entries, and other people to be liquidated out or stopped out. We're looking for that. But number two, also this market maybe could have rallied to higher highs. If not, if you look at the 1 hour chart, you can get to see this market had gone. Now you knew here. This market from entry point, I was waiting for it a bit lower somewhere here. It had gone, so I knew this trade was gone. I had missed out on that trade and all. Then the next few minutes, I normally have alarms on my phone. I'm hearing markets hitting my alarm, and markets are just falling crazy, crazy, crazy. And remember, I always have a rule: wait for candlestick to close before you get any entry. Many people, if markets just fell below, angechukua hiyo trade haraka haraka saying, hey, let me enter, now my entry has been reached. But immediately it could have been stopped out. So I didn't get this trade, but I still believe markets will rebound from these levels. But we'll talk about this later, maybe in a different video in the live session with my students later on this week. I believe maybe on Wednesday, Wednesday early morning. So I'll talk about these trades and opportunities that you can prepare yourself moving forward, because many people trade this. Today, I'm just doing an overall market analysis. So you're seeing those drops are what happened. Pre-crash anomaly. Now, this is important. This is what I was saying, that some people, some companies that took nearly a $200 million short position just before the market crash, just 1 hour before market crash. And the good thing about trading cryptos is that everything is on the blockchain, so we can see that in real time. Unlike trading normal CFDs and these other markets where you can't really get that information unless you're an inside person or you're running the company itself, you can't get access to this. But anyone trading on the blockchain, we can see those positions in real time. So you can see here, 1 hour before the announcement, a Trump-linked WLFI, now this is World Liberty token, dropped 40%. Okay, dropped 40%, meaning that people who liquidated their position just before, they just took profits or took their money out just before the news was announced. 30 minutes later, two newly activated wallets on Hyperliquid. I've talked about Hyperliquid in a different video. If you search for a video on YouTube where I was talking to Ken over the phone about some whale trade on crypto, we're talking about Hyperliquid, opened a $200 million short position, perfectly timed to the coming chaos. So if you look here, these are the public addresses. Now you can go to this page, copy this, go to different websites where you can get access to that link, and you see what happened. Deposited 30 million, 12x short position, leveraged money. So basically, in short, combined profit was roughly 192 million, with one Bitcoin OG well netting over $160 million in 30 hours. And that's what you say. Sometimes you can wait for a whole year to make one trade, and that one trade is what gives you money for the next couple of years. Just one trade, because 130 million, 160 million in 30 hours, my friend, is not an easy position. But that doesn't mean that guy just took that position. This person had well prepared in advance on that. Okay, so it was information weaponized. Analysts flagged it as potential insider trading. My friend, that was just too impeccable not to be insider trading, with shorts exceeding 1 billion in notional value. Okay. These are just other details, timeline chaos. No need to go through that one. Exchangeable behavior. You can come and read about this. Now we can talk about what happened with the whole world here. The human toll was 1.6 million accounts were liquidated, and I hope you weren't one of them. But 1.6 million accounts were liquidated, with 96% of futures traders eliminated. Okay, so there are many people who lost money, many people. A Chinese trader, better known as Brother Ma, lost $10 million after peaking at 44 million. Communities on Bybit or OKX, many of you know OKX and Bybit, reported bankruptcies and mental health issues and crises. X flooded with despair, including suicide-coded tweets. People tweeted, "We don't need new coins, we just need justice," because they believe Trump actually was used by people to crash the market, so people want justice. Trump didn't crash crypto, someone used him to do it, that's what I was saying. Hyperliquid made $44 million while 1.6 million people got wiped out. Leverage kills, principle is everything. This is true. I'll always say this. Leverage kills. It's always hype and fun and enjoyable when things are going great and things are going up. But when the opposite happens, that's what happens. Moreover, tens of billions were liquidated in just moments. How do things recover? So looking at how things were blown out. Now, I've just come into the markets, coin market cap today, and I'm surprised to see that 25 million cryptos tracked. And I've talked about this before. And I've been looking for that video on our YouTube channel. I just seem not to find which one. There's a video in my YouTube channel some years ago, I think about 3, 4, 5 years ago. I talked about the crypto markets. And we talked about the current total market coins that were existing were 8 to 10,000 of them. My friend, we are now to 25 million. And if you look, I think a few weeks ago, not too long ago, one of the videos I shared, we weren't at 25 million. I think we were trading at, I don't know, slightly below a million. But the number of coins, ICOs, and coins that are being tracked and coming up are crazy. And we'll sort of go into a period like the dot-com crisis where we had a crazy crash. And that might happen at the end of this decade, might not happen anytime soon, might happen towards as Trump comes out of presidency, the new president who comes in, maybe new restrictions, and maybe a few years later we'll come back to this video and look at if my prediction was right. Because towards the end of certain, like you remember, towards 2000, the 2000 to 2010, just before that we had the housing bubble, which crashed in 2008, 2009. We had the 99.com crisis crash that happened just before we crossed a century. In 1987, we had another crash which happened and really destroyed the Japanese market. So towards the end of the decade, we normally tend to see this. So as Trump is coming out of presidency, we might start seeing those tops and those happening in the markets, especially the crypto market. This is crazy numbers, okay? But that's just my prediction. You can go do research on that. Do your own research on that. So if you come here to market cap, tend to see what happened. We peaked at 4.3 trillion, just slightly around 4.32 trillion. There we go. On the 6th of October this month. And as Friday came to an end, that market alone, we were at 4.15 when the day started. And by the weekend, the markets had crashed to 3.6 trillion. That means we had lost about 400 to 500 billion dollars wiped out from the crypto market. Of course, there are many people who lost money. If you look at the company's market cap, now here, this is company's market cap. Remember, this is coin market cap and this is company's market cap, totally unaffiliated websites. If you come here to total market cap, now you can see here we have a very big market cap as compared to cryptocurrencies, which has just a total of 3.9 currently, 3.9 trillion or 4 trillion market cap. When it comes here, we have about a 130 trillion market cap. If you click on that, you're seeing over the weekend, markets are trading just on 9th October at 132 trillion, 133 trillion, and the next day markets were down at around 130 trillion, meaning we had lost 3 trillion. Almost the whole of the crypto markets was wiped out. Basically in the stock markets around the world. So you can use those ones to be checking those things. But over the weekend, Trump came again and retweeted and said, "Don't worry, China." This is now yesterday, 12th October. "Don't worry about China. It will be all fine." Highly respected President Xi just had a bad moment. He doesn't want depression for his country, neither do I. The USA wants to help China, not hurt it. President DJT Donald Jr. Trump. And that's basically what happened over the weekend and how markets were affected. If you look at these markets, they've not yet opened. You can look at the Apple markets. Markets were crazily down, but you can see already pre-market open, pre-market valuation prices are already much higher. If you look at NVIDIA, what happened, the markets crashed. Pre-market open, you can see markets already shooting up. And that's what we're looking at with the indices. Now, I'll tell you one thing about how markets work. I'm looking for these positions to really trade them, but I'm not looking to trade them immediately. I'm still looking for these long positions to recover, but I'm not at this price. Markets have had a big gap open, and I'll give this market some time I don't think I'll be trading these markets this week. The only markets I'll be having running is the Ethereum trade that I have running, and I'll look at that in a few. Okay, those are the only trades I have running for now. But the stock markets, gold is still creating all-time highs, so I'm not in that position. I was looking for some correction here, but that didn't happen. You can see market has gone to a new all-time highs. I was looking for some correction. If markets came a bit lower, maybe gotten a retest of this level with the form of that flag pattern. Remember, principle is key, following your key strategy. I was looking for some correction there. Market had rejected here. I was looking for markets to come here, maybe spike this level, get some correction. I would have looked to go long on gold, but that's not the case. And I'm staying out of that market, okay? But you're looking at things like Solana, which is building up. There's a very beautiful flag that's happening here. Let's look at it here because it's also important. There are things that I look at. If you notice my charts these days, I heavily look at the moving averages. And moving averages for me act as dynamic support and resistance levels. And when in an uptrend, they really act, the 50 EMA really acts as a good dynamic support level. What you're just seeing here, you can see how markets came here on the daily chart, okay, acting as good support levels. If you look at Ethereum, markets came even near trading the 200 moving average, which for me was a very good buy. I'd traded here before. This is where I got my previous entry where I had bought and markets were going up quite well. But you remember, we got some resistance level here. So amongst what also Trump was saying, markets still followed technicals. You can see we had some resistance there and markets really dropped. I believed we were just having a short-term correction. I believed for markets just to come and get a correction here, then continue moving to the upper side. But that didn't happen because of the news. You can see that day markets actually crashed about much lower. But we got here on Sunday yesterday. The good thing on CFDs these days and crypto, you can trade over the weekend. I took my trade on Sunday evening, just around here. Let me get more details on the 4 hour. Around here, you can see after markets came, we were trading heavily below S3 level, and markets started getting that rejection. Just around here, I took my trade. Sorry, this is Solana. This is Solana here. Also, this one was just below S3 down here. Okay. Now remember, here is where I had my break even. So me was taken out here. I had a break even here. So this took me out. So, and I got a new position down here. I remember I was buying at the 3800 level, just down there, slightly above there. Just after this 4 hour candlestick closed, I had that entry looking for markets still now to go back to this all-time high around here with much better risk reward. You can see now I have a 1:5 risk reward. This trade is actually running at a 2% profit. If you come here, yeah, you can see here markets, I saw my trade running, it was at 2%. I just took slightly above 1% risk on that one, looking for markets. I've already broken even on this one, so I don't have any trade loss running on this one. I believe this was an extended correction, an A, B, C, D, E. Now those are for creep Elliott wave. People look onto waves. I'm still doing a lot of research on that, but that's what I had. But you see, I got a good entry. Solana was also showing a very impeccable entry. And like I said earlier, I wasn't looking to trade this one because I only have one crypto running at the same time. You can see that flag position. Go back to our moving averages. You can see how markets stopped at the 200. You can see this. So we had this fast inner trend line. You can see this first touch, second touch, third touch. Markets pushed higher. People took that trade. It was still a good trade. If you took some profits off that, it was good. But what happened there after markets broke that trend line, came to this primary, that was the secondary trend line, came to the primary trend line. You can see how it was in line with the 200 moving average, smooth moving average. You can see how it's in line with the flag pattern. You can see how it's in line with the trend line. And mind our view, I've not even put the Fibonacci and all those others. If you come here, if you look at the pivot points, we can see markets had really come near the S3 on the daily chart, and on the 4 hour it is trading below S3. So this one, I saw that trade, it was a very good trade, but I had Ethereum running, and this one, the best I can do is just watch it and understand how markets move. But I really believe markets will rebound, especially if no further tariff, if we really soften that tone, depending, and now people are watching what China is going to say, if it will retaliate, and what US is going to say the next few couple of weeks before this month actually ends. So that's what I'm watching, and that's what I had for you guys today. And yeah, I think I've talked about many things. We saw some synthetic stable coins, US is it USDE. um we had some stable coins have quite the crash over the weekend. Some anomaly. It normally happens over the week. And this normally tends to happen in different markets. You can see this market, it's supposed to be a stable coin. Remember, stable coins normally maintain a parity with US dollar to 1:1. But you can see over the weekend, this one on that same day, Friday, it crashed all the way to 0.65. And this was a market anomaly. People lost money if you had those accounts, but it quickly recovered. So maybe many of you didn't notice, but many people could have even taken a trade. If you go down to the 30 minutes trade charts, you can see this one. Even if you go to the 5 minute now, these are markets for HFT, frequency traders. Where is this? They're the ones who got this opportunity to buy in and out of this trade. It happened within minutes. You can see this happened at um, 0:20 midnight, okay, and it was back to stability by 2. So around 2 hours of crazy anomaly, and people who bought here, because it's a stable coin, we know we already have a predetermined target. Markets really rebounded here. But I'll talk to the experts about this, the likes of the real JBO and the likes, to see what they say about this and what they think about it. They're the ones who are the crypto guys who watch this. But slowly, like I said, guys, I'm not into forex pairs anymore. These days I'm fully focused on trading cryptos, investing in cryptos, a lot of research on cryptos and blockchain and tokenization and those stuff. I'm trading indices and commodities, and I don't put pressure even. I don't look to trade them every day. If it comes, good. If it doesn't come, well and good. So that's it for today. Just did a deep market analysis, and I hope many of you enjoyed that. And yeah, I'll see you in the next coming videos. And remember, we have there's something that we're cooking up with Ken, that will happen towards the end of the year. If you remember, these days we normally give access to our online course, but we're looking to do one more online, not physical, but one-on-one. We're targeting about 20 students, so we'll do one more class ya mwisho kabisa, and look at many things huko. Okay, so more news on that to be announced, when it's going to be, how we'll be pricing that, and the access you're going to be having. So we'll do sort of a first half of it from mid-November to mid-December. We take a break, guys, go and trade, use that information we've told you, then come and do one last one during January and Feb, and just end it there for the year. But we'll talk more about that later. But other than that, I hope you've enjoyed this. I hope you've had a good one, and I hope to see you soon. Join our student courses, get access to our course so that you can get access to the webinars that we do, the private ones, which we'll be having one this week. Last week we didn't have one, but this week we'll be having one, as last week we were a bit held up. So that's pretty much it from me. If you want to contact us, our details are below. And remember to always stay woke, stay financially literate, and I'll see you in the next one. Peace. Unfiltered, guys. This is unfiltered.